All right, let's talk about an end of the year financial checklist. There are a lot of things that are worth thinking about as you come to the end of the year when it comes to your finances. For example, many doctors and other high income professionals are doing backdoor Roth IRAs. This is when you fund your Roth IRA via an indirect method. You contribute first to a traditional IRA and then you move the money into a Roth IRA. The paperwork for this works out a lot better if you do it all during the same calendar year, both the contribution step and the conversion step. When you start getting, at the very end of the year and you do your contribution on December 29th, and then you find you can't get the conversion done before the end of the year, you end up with more complicated paperwork. So this is one of those things to make sure you knock out before the end of the year. And yes, you have until April 15th to make your contribution for the prior year's IRA. Yes, you can do a Roth conversion at any time. But if you're smart, you'll do this during the same calendar year as the year for which you're making the contribution. Same thing with other retirement accounts, whether it's contributions to your 403b or 401k and you need to max those out, or maybe you want to make what are called mega backdoor Roth IRA contributions. These are after tax contributions into a 401k that are then converted to the Roth 401k option. May want to knock those out before the end of the year. Roth conversions, again, they are taxed in the year in which you do them. So if you want them taxed in the current year, you need to do them before the end of the year. Another thing to do before the end of the year is to make sure you use your flexible savings account money. Unlike a health savings account or HSA, an FSA is use it or lose it. If you don't use it by the end of the year, the money's just gone. It goes back to your employer, I believe. So make sure you use that. If you didn't have as much healthcare expenses or childcare expenses or whatever the FSA is for before the end of the year, try to prepay some of those, go buy some ibuprofen or whatever in bulk, use that money up. Otherwise, it's gone. Another great thing to do at the end of the year is to check your insurance coverage and make sure you're not overpaying, make sure you have adequate coverage. Make sure, if you've gotten to the point in your life where you no longer need it, you can drop your disability and term life insurance once you're financially independent. Always a good idea to review that, and annually at the end of the year isn't a bad time to do it. Charitable contributions, again, for most people that itemize their taxes, although you can get a little bit of a charitable deduction even without itemizing these days. But for most people, if you itemize your taxes, this deduction happens in the year in which you actually give the money to charity, okay? Whether that is directly or whether you put it in a donor-advised fund and give indirectly, it's when you make the contribution to the donor-advised fund. But if you do this in December, you get the deduction for the current year. If you do it in January, you don't get the deduction until the next year. And so giving to charity is often on people's end-of-year list. Here's another item, spending your CME money. Sometimes that can be use, lose money as well. And here at the White Coat Investor, we have a number of CME products that qualify for CME that you can use your CME money on, such as some of our online courses. Our conference also qualifies for CME, and so you can use your CME money for that. But if you have use, lose CME money, make sure you spend that before the end of the year. You might have savings goals, to save 20% of your income or save, $40,000 or $100,000 or whatever your goal is for the year. Add it up when you get close to the end of the year. See how close. And if you're not close, make sure you put in the rest of the money to get to your savings goal for the year. Another great idea, something to do once a year, whether you do it at the beginning of the year or the end of the year or on your birthday or whenever, is to check your credit report and just make sure nobody's out there fraudulently obtaining credit in your name, that there's not somebody reporting something that's not true on your credit report. Well, you shouldn't worship at the altar of the FICO score. It is a good idea to at least pay enough attention to it to make sure that you don't have, an inappropriately low credit score. You don't need to use it all that often in your life, but when you need it, you do need it. And it's just not fair if your score is lower than it should be because of inaccuracies on that credit report. Okay, at the end of the year, you may also want to do things that help your tax situation. These could include accelerating your expenses. Businesses do this all the time, right? They try to pay expenses in December and delay their income. You try to get the income in January because then you don't have to pay on it until the next year. But you get to use those deductions from the expenses this year. So front load your expenses, backload your income whenever possible. Another useful thing to do at the end of the year, especially if you have found that you are not withholding enough money, to pay your taxes, or if you find that you are having way too much withheld and you're getting this huge tax refund back, review that W-4 and figure out if you have it set up right so that you're approximately getting this game right, so that you don't have to either write a huge check in April, nor are you receiving a huge check in April. For those of you who are not employees, you need to calculate your fourth quarter estimated tax payment. That's due January 15th. And often it's exactly the same as it was for the first three quarters, but you'll want to make sure you do that at the end of the year as well. Some people like to front load their investment accounts whenever possible. And, so they try to max out their Roth IRAs and their HSAs and even maybe 529s and 401ks in January. And so you can prepare to do that so that you can, have that money working in those accounts as long as possible, so that this tax protected growth, this tax protected compounding has as long of a period as possible to work. So you may want to prepare to front load your investment accounts at the end of the year as well. You can also start collecting your tax paperwork, right? While very few people file their taxes in January, by the end of January, you're starting to get everything you need if you're an employee and don't have any partnerships. And of course, that might not be until March or even later if you are a member of a number of partnerships and have to wait for a bunch of K-1s. But you can start putting your tax paperwork in order at the end of the year as well. Tax loss harvesting is when you exchange one investment for a very similar investment in order to get a tax loss without changing your portfolio in a significant way. Those losses can be used against ordinary income up to $3,000 per year and an unlimited amount against your capital gains. So there's really no reason to sit on losses in your taxable account. You might as well exchange it for something similar, collect that loss, and you'll be able to use it either this year or in some future year. You can carry forward an unlimited number of these losses for an unlimited period of time. So take a look at your investments, take a look at the cost basis versus the current value, and see if there are some opportunities for tax loss harvesting. At the end of the year, many of us also update our spreadsheets. It's a good idea to calculate your net worth and your savings rate and your return on investment once a year to see how you're doing in accordance with your financial plan. Lots of great things to do at the end of the financial year, and and use this kind of checklist to work your way through and make sure you've done everything you need to do before you move into the new year.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.